Okay, everyone, welcome back to Beyond the Headlines. And we have my buddy Steve back this time. Tech issues, knock on wood, appear to be all solved and ready to go. So if you're new to this series, again, welcome. Please obviously like and subscribe and share all that. But this is where two people who are very technically minded when it comes to charting and looking at stocks takes a look at the week's headlines, and then we go into the charts and we take a look to see what is actually happening. This week, we're going to talk about the meme stocks seem to be completely falling out of bed and dying here. On the inverse of that, we have cocoa prices, which look like the new meme stocks. And then also, we have Reddit, a new IPO, and some talks about IPOs. So I'm going to get started right away and talk about some meme stocks, and then we'll throw it over to Steve here for taking a look at the cocoa prices. So, first article here, we have both GameStop reported earnings this week, missed everything and fell, I think, about 20%. And we also have AMC hitting new all-time lows, down and crashing as well, and because they're issuing more shares. And the reason I wanted to talk about this is A, it's all over the headlines, and we want to take a look at the chart, see if they're confirming the story. But B, what we'll talk about in a bit when we talk about cocoa and things like this, we'll talk about different types of charts that you can look at and the idea of kind of just moving on from this. So I wanted to bring up something here when it came to AMC as well, just showing that the float history over time. So for those who don't know, when a company issues more shares, it essentially takes all of the shareholders that exist and takes part of your ownership away. So back here in 2020, if you owned 10% of AMC, you currently own less than 1% of AMC. That's how it happens. Is as the company issues more shares, the amount of share ownership you have as a percentage of the company decreases over time. So again, a 10% owner is at less than 1% of total share ownership when it comes to AMC. And just going to the chart, I don't know how long we'll talk about this, Steve, because, what else do you do here when you're looking at something like this, right? So we have a daily chart that looks like this. And then if we do our little picture-in-picture swap, we have a monthly chart that you can barely see the price action. So I'll ask you, Steve, but I think I know your answer. Chart confirming the story here on AMC?
If the story is dilution is bad, then yes, the chart is confirming the story. Go ahead and put my chart up just so you can see the
Mm-hmm.
confluence of all the moving averages, what they look like when they all come together. It's like a masonry wall. It's
Yeah.
a real tough headwind to get through. And it tried yesterday, but you can see that green candle just got stymied right in the pocket of literally three key moving averages, the 10, the 20, and the 50, all just denying it. And then the overnight news, giant gap down. There's nothing pretty about the stock technically. So, it's your call for the reason you own it. I don't like it technically.
And just take that chart, Steve, quickly and go to a weekly chart on that because I think there'll be some good evidence there as well. If you flip that over to a
Well, I have
weekly
my
chart,
monthly. Yeah.
just
Yeah.
based
There we
off
go.
so the moving averages on your chart there turned down. It looked like when AMC was like $100 a share, split adjusted, and now we're sitting at 3. Right. So, if at nothing else, when you look at someone like Steve who uses moving averages as a trend direction, it just keeps you out of trouble. Right. So if you're interested in AMC and you believe whatever story it is that you believe about them, just seems to make sense till you're above some key moving averages. Those moving averages are sloping higher and acting as support as opposed to acting as resistance. So again, you're now, if you own 10% of the company and now you own 0.75% of the company, it's probably going to be like you own 0.5% of the company at some point. So again, even if you're still a meme stock person, you're one of the people that are left, I just say, hey, wait for the trend to confirm the story, right? As Steve's drawing in there, wait till
Yeah.
you get above those at least.
That area would get me interested, perhaps, with a catalyst, of course. But yeah. What else we got?
Now, flipping that chart entirely, here is the chart of cocoa and chocolate, just absolute rocket ship. I don't know the story behind this. I don't, there's been a bunch of things talking about positioning may have got out of whack. There was, too many shorts. When it comes to commodities, it can be like crop perhaps, bad weather for crops or something like this. But kind of
Yeah.
the flip of that AMC chart. And I think, Steve, you got a couple ideas that you think may be
Yeah.
interesting to watch with this news.
I actually cut my teeth back in the 90s trading commodities. And one of the things I learned that the cocoa market was really gnarly. It basically all comes to the west coast of Africa, the Ivory Coast. And sometimes it's just difficult to grasp some commodity that's just so centrally focused. With that said,
Hmm.
I brought up General Mills, GIS, and American kids and their families love to feed their kids sugary chocolate cereals, and so I would imagine the margins are there. Does the chart confirm the story that they're doing okay? In this particular case, it does. The yellow stripe here is earnings. Again, a good reason to never chase a gap up, regardless of earnings, but it's actually positive when it comes in, settles in, and we've basically built a base camp above the 200-day and the 10 period. And I just think, not that companies should be making gross margins on these types of anomalies, but it is what it is. The bottom line is making that a scarcity, and a lot of Americans do love their chocolate. Probably leaving out other countries as well, but this is something to keep an eye on. Another one was DNUT, Krispy Kreme, if I can type that. This one's a bit more squirrely, but like we said earlier, when something happens, you don't want to lose track of it. I think they made some sort of a deal with another. I don't even want
McDonald's.
to. I don't have the headline. Thank you,
Yeah.
McDonald's. But the point being is, this is nasty. However, donut and the price of cocoa and all that, we're all kind of been put on notice here. So let's keep an eye on these stocks when these moving averages start to come up and meet the price, and don't lose focus of those.
Yeah, and I will just say, going back to the chart here on cocoa, right? This, nothing happening in this one for years and years and years, sitting around 2000, 2500. All of a sudden breaks that and looks like it's knocking on the door of 10,000 a year. The one thing that I can say is that when these commodity super cycle happens, you don't want to be on the other side of this. Eventually this will break, right? Eventually it'll come back down. If you look at the wheat chart, how during the Russia invasion of Ukraine, there was all the headlines saying, "Oh yeah, we're running out of food. It's going to be so bad." And you had this big rally from $5 to 10. And yes, it broke at some point, but you don't want to be the guy on the way up shorting it at 5 and then shorting it at 7 and then and then you get run over. So if you are going to wait for some sort of revision here, I just say, just again, wait for the chart to confirm, wait for the trend to change, because a lot of this stuff I think people can certainly get run over for. All right, now let's take a look at Reddit. Now, there's not really much of a story here other than Reddit, which is, I would say, one of my favorite social medias, has actually gone public. And I like Reddit because it's not about people, right? It's about stories, and it's about news, and it's about. I like the voting mechanism. I don't know if, Steve, you spend too much time on Reddit, but
Upvotes.
yeah, it's community curated what's good or what's bad. This is, I think, going to confirm, what we've been talking about pretty much this entire length of the podcast, is that you have these moments where it makes sense to get involved. Above the IPO price is certainly a common one. It spent about 2 or 3 days under the IPO price. It broke that price, and then you had a nice little push on it. And now we are back down below that IPO price. So one of the things I wanted to focus on, I remember saying this in a few places, but I can't remember if it was this podcast or not, is that there's been massive studies done on IPOs. It's a very easy thing to find data for, and it turns out that roughly 85% of all companies that IPO undercut that IPO price at some point in the first 6 months or so. So for me, I'm not generally interested in chasing that IPO price. What I want to see, just like we talked about after earnings or any kind of news event, is you wait for all that to shake out, and then you kind of generate a plan after that.
Yeah, come over here. I've been drawing some 60-minute candles using an anchored VWAP from the
Hmm.
IPO price. And it's not constructive. It is not confirming the story. This right here was acting as support, these last few candles yesterday. Again, we're anchoring from the very first trading candle using 60-minute candles. Well, today we are handily below the value weighted average price from the initial IPO offering. That is not constructive. So for the moment, I wouldn't be touching Reddit. And we don't have a whole lot of, for me, I don't have a whole lot of data to really go on. So that's why I downshifted to the 60-minute candles and put in an anchored VWAP. That's one of the strongest indicators, I think, that people will use from an IPO because it's a fixed event in time that's very much anchored in people's psyche and emotion. And those lines can really be definitive. And if we look back, we can even see the very first day it was acting as resistance, and then it became support, this purple line again. And then we've basically found support yesterday, but that line has given way today. So people are getting itchy and they're taking some exits. I wouldn't be touching it just yet.
Yeah, I completely forgot about that. So thanks, Steve. But yeah, wholeheartedly agree. I love that there was a trade there yesterday at that anchored VWAP IPO, and that actually would have been a, if you're talking 55 to $60 in the matter of an hour or so. And then yeah, tried to test it today and just failed entirely. So just quick explanation for those who don't know, this is actually a scan that we do have in Trade Ideas as well, where we can find stocks for you that are at an anchored VWAP from an IPO price. The idea, founded or popularized by a good friend of Trade Ideas, Brian Shannon, basically talks about how this purple line that me and Steve both draw represents what the average market participant for this stock is from the length of the length of the stock, from as long as it's existed. This has showed us essentially what people are looking at. So, the question becomes all the time: where do I anchor my VWAP from? How do I anchor my VWAP when I'm trading these things? And the beauty of the IPO price is it kind of removes all of that questions, because okay, this is when the company started. So if people were buying this company all the time, the average price of the average person within Reddit is just this purple line right here. So the idea would be simply, if we're below that, you probably want to stay away or look to take shorts. If we're above that, you want to look to take longs, because that's the great sentiment indicator. Is if people are up money, they're happy. If they're down money, they're sad. So, all right, Steve. So you wanted to talk about some gold. Let's pop over here to your screen.
Yeah, let's do that. I'll start with really the weekly kind of, and kind of tells the story. I want to remind people that not last week, but the week prior in our podcast, we ended the show with keep an eye on gold mining stocks. And I'll get to that ETF in a moment. But the GLD is just a simple ETF on the weekly. You can see we have broken out of a wonderful, cup and handle or whatever you want to call it there. Really nice move, and we're continuing to move higher. So that just begs the question, and I'll go back to the time frame daily. You know, sometimes you can be early. We talked again about not losing focus of individual stock names or individual or sectors for that matter. This was where we were interested. All right. Now we've had all this data since then. We had a lot of volatility. We actually broke down through the 200 and then reversed right back up. So in hindsight, when you look back, you can't tell in the moment. It's frustrating in the moment with the volatility, but in hindsight, sometimes things have a head fake and they just back up and wash out the weak hands, kind of like pulling a bow and arrow. You got to kind of stretch that bow and then release it. And I think we just released the GDXs. So again, to belabor the point, we were 2 weeks a little bit early on this. A lot of volatility didn't help in between there, but between point A and point B being today, it's moving higher, and please don't lose focus of these stocks. We also mentioned you can get a little extra bang for your buck in the junior miner, and it's the GDXJ ETF. Actually, a little bit of a cleaner chart there as well. Really held the last 3 days of that 10 SMA and then broke out nicely. So probably going to have a date back here with this $40 level pretty soon here in the junior miners. But if you have your favorite miners out there, they seem to have a green light.
Yeah, and what I want to highlight on that chart, right? We started the podcast talking about AMC and the disastrous downtrend of all of the meme stocks, and then Steve just highlighted, hey, I took a trade, it shook, it shakes people out. I move on with my life and I can get back in, and that is the advantage that we have as retail traders over the institutional guys. We can get in, we can take a small hit, get out, and then we can get right back in again. So using something like these moving averages or any sort of trend direction, the VWAP that we talked about just a second ago on Reddit, the beauty of these things is that you can take a small loss here or there, and it won't hurt you at all. And eventually, when you get on the trend, it will erase all of those small losses plus a whole lot of money if you do get a good trend. Imagine GDXJ turns into the next Coco, and things are off to the races. But again, the beauty of this is that you can be a little bit early, whether you took the trade and got shaken out, or whether you just waited for something to occur. That's fine, but just don't, until it's invalidated entirely and for a period of time, make sure you keep it on watch. Because again, our advantage and what we do at Trade Ideas is to make sure that we can be nimble. We don't need to get married to anything. We don't need to put hang our hat on a single style or strategy or whatever. We come up with ideas. They either work or they don't. Just because they don't work right away doesn't mean you completely forget about them. That green line that you see on Steve's chart right there is just the price alert. So, that price alert triggered and then maybe faked out a little bit, but he can just leave it on his chart and say, okay, let me know the next time it gets to this price. And if he's looking back in 2 weeks and GDXJ just completely fell out of bed and hit new lows, you move on to the next thing. So yeah, use a software, preferably Trade Ideas, but any software you choose, just to make sure if you have an idea, you're constantly keeping it in the forefront of your mind.
I would add to that, and I don't necessarily have any specific stocks to watch this week, and we're just going to kind of leave you with this sector. But I will say this: what Michael's talking about is so important, and it can become a trap to new traders. You get addicted to the story. I know I'm right. I know I'm right. The market's wrong. If I sell here, I'm going to wake up tomorrow, and there's going to be good news, and I'm going to be out of it. Well, I'm going to tell you that that's the worst thing you can do. I did it when I first started trading, and it's commonplace for people to do what I call an albatross. You just hang the albatross around your neck, and it's the trade that's not working. And every day you look at it, and it takes mental capital and emotional capital and literal financial capital. So sometimes clearing the decks, telling yourself, I'm good enough where I can stay on top of this and I won't lose sight of this, and I can trade around and pick another entry. But for now, I'm going to rip the Band-Aid off because this is just causing me too much focus that is not constructive.
Yeah,
Don't
and
fall into that trap.
I never hit that at all, but I think that makes perfect sense, right? There's only, which is why we, built the software we built and use the software we use, because, there's only so much human brain power to go around. So if something's not working for you, kill it, set some alerts, put something in Trade Ideas to say, hey, let me know when this thing breaks this level, or put it on a scan for stocks that are breaking new highs so that it will pop up if that's occurring. And then, yeah, move on. Reserve that mental capital for something else. And then if and when you turned out to be right, you'll see it, right? You'll get it. So, okay, Steve, any closing thoughts for the people? I think that was a good one. I was glad to have you back too. It was rough doing the solo last week.
Lonely. The only thought I have is I did, if you're on our Trade Ideas channel, I put out a video on how to stop buying breakouts and start buying pullbacks and be a better contrarian entry trader, if you
Hmm.
will. It's getting some good play. It was just released today, which is Thursday. This podcast will come out Sunday, so give it a look. If you see it on the dashboard, there's a lot of good
Cool.
info in there, and there's a scan you can email and request as well.
Nice. Yeah, and then for me, I did a couple interviews that were great. The last one that came out was with Anne Marie Band, which was phenomenal. We got another one coming out next week with a buddy of mine, Andy Moss, which is great. So while you're on the channel, peruse in, check out some of the other things we're doing. We completely revamped the way we're doing things on YouTube, and I, for one, am liking it much better. And so are you guys, based off the feedback I got. But while you're on those videos, if you want to give them a little like, if you want to, share them with your buddy, and make sure you subscribe, that helps us out and it helps out the channel. And we greatly appreciate it. So until next time, I'll talk to you guys next week.
See you.
Yeah.